Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for Wednesday, the 11th of the 8th, 2021. Time has just gone 04:30, 4:30 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, Tuesday the 10th then, yesterday, we had a negative opposed driver in the yen at -88. Front and back door flows mainly going into the dollar at +49, into the pound at +43, and the euro was a negative rock at -4, activity ±92. Intra-week then, this is from Monday the 9th, open to about 15 minutes ago. We've got a positive unopposed driver in the dollar at +116, no backdoor flows, the opposing negative flows mainly coming out the euro at -52, out the pound at -46, and the yen was a negative rock at -18, activity ±116. So over the week then, we've got a strong dollar dominating, and yesterday we had a weak yen driving. Right, intraday then, this is Wednesday the 11th today, open to about 15 minutes ago. We've got a negative opposed driver in the pound at -33, front and back door flows mainly going into the euro at +28, into the dollar at +18, and the yen is the negative rock at -13, activity ±46. Right, what's going to knock it about? Well, let's have a look. We've got German CPI today and US CPI, and the focus seems to be on the US CPI, and we'll talk about that in a minute. We've got an extension of lockdown in Australia as well, so that brings us up to date really. So let's have a look at the flows and the asset classes, and then try and make some sense of what's going on. We're looking at let's say complex flows to start with. So let's have a look, and these are the flows in the Asian session. Right, so euro is strong except against the Swiss, which is stronger. The yen is weak except against the pound and the AUD. The pound is weak across the board. The Swiss is strong across the board. The CAD is strong except against the Swiss, the dollar and the euro. The AUD is weak except against the pound. The NZD is strong except against the euro, the dollar and the yen, and the dollar itself is strong except against the Swiss, the euro and the NZD. Right, so what have we got then? We got pound weakness in the Asian session, and we've got Swiss strength in the Asian session, and take your pick in the middle. Right, so let's have a look at the asset classes, and then we can make some hopefully reasoned analysis as to what's going to happen in today's markets. Right, so let's have a look. US dollar index. Right, basically you had this break, it came back, and it's now pretty much at the previous highs. So the dollar is very strong at the moment. Gold shouldn't like that. Had that double top, sub top, and it had that spike down, and it's now operating at -0.27 from the floor. So 20%, 27% from the model floor, quite soft. And bear in mind that floor is a spike. Oil had this big pump up. It came back to base camp, and it's now operating at about 0.4 from the floor, just below half marks. So oil's pretty weak as well. Wall Street, Wall Street had this treble top, and it's now broken slightly. So remember we had that infrastructure bill passed yesterday, past the early stages anyway. So that's Wall Street for you. S&P basically had the break, and it's above the high now. So tech had the break, it broke again, and it's now sub the high. So the tech is lagging in terms of US equities. Right, US 10-year. This is the bond. Right, where are we? Basically, we had this. This is the price. So we had this big rising price, falling yields. Came back. It's broke that, and it's now operating at half marks. So the price has come right down again. Yields have stiffened up in the US. The bund, which is the European equivalent. Let's have a look. The bund had this big rising price, similar to the US, and it's come back a little bit. So it's 0.18 from the high. So relatively speaking, European yields are softer than US yields. And this plays into the euro dollar weakness to a certain extent. Right, so what do we got? Copper. Copper, remember, had that period of chop. It did a massive break up. It came back, and now it's coming back a little bit. It's 0.40 from the floor, so it's below half marks. Relatively soft, but it's come back a bit. And US steel finally has where are we? Here. But it's been soft for ages, and it's now back at the highs, probably off the back of the infrastructure bill passing, or the initial stages of it. Right, so let's get rid of that and make some analysis then. So, as we said, there's two key bits of data out today. There's German CPI and US CPI. The market's focused on the US CPI, but the German CPI will obviously have a bearing. So, and it comes out first. So you've got this German CPI, and the options are basically neutral, positive, or negative. And this will feed into the US CPI later. And likewise, they've got the same options, but you've got this feed here, which will remember the dollar index is right at the top. Equities have broken to new highs, ignoring the tech slightly. So you've had this infrastructure bill passed. Oil's a little bit depressed. Copper's a little bit depressed. US steel's up there. So let's have a look then. So and if you look at the flows, right. So where are we? Yes, last week, the last trading week, the euro was negatively driving. Okay, so it's minus 211. It was the opposed negative driver, and you had dollar strength. And the week before that, we had dollar weakness. So last week the dollar came back up, and you've had this continuation this week. And so far, the dollar is now operating as the unopposed positive driver, which normally means one of two things. It either means it's at a peak in terms of it's going up, or it's the start of a further ramp up. Now. So that's where we are there. So you've got the majors, the dollar, the euro, the yen, and the pound. So you've got the equity transmission here. Remember, equities are basically right up there. You've got the euro. You've got German CPI coming out. You've got the dollar, which you've got the dollar index, which is right up to the top. So it's high. You've got US CPI data coming out, and the pound is out on its own, really, on a limb a little bit in terms of where the flows are going. So you've had you've had flows into the dollar. It's now at a peak. Equities are have punched through or at a peak, and the 10-year bond yield is quite strong now. It's half marks for the US, and it's outstripping the EU. So we're looking. You've got all sorts of conflicting things. So depending on what happens with the German CPI, ultimately we're going to be making a decision as to whether this unopposed positive driver in the dollar is the start of a further dollar ramp up or the peak. And if you look at your web watch lists, if you set them up according to one of our videos, you'll be able to see straight away what's happening with the USD complex. So at the moment we can't make an informed decision because we don't know this data, and the market's parked at the peaks. So that's where we are. If things line up, if you get strong German CPI and you get weak US CPI and the dollar starts coming off, then you're going to get a full complex move down to the downside in the dollar, in which case we'll be jumping on board selling the dollar. Okay, so that's as far as we can go. Hope that was useful. Thank you for watching. See you tomorrow for the daily brief.